What's up, everybody? Welcome back to Beer and Money. My name is Ryan Burklo, and on today's episode, we're going to be talking about the illusion of progress when your money feels and looks good on paper, but still feels stressful. This is a conversation we have many times with newer clients that come with us. As a matter of fact, we just had a client just last week where had a first meeting. They're making really high income, and they're like, "Hey, Ryan, I've got RSUs coming in the door. They're vesting. My net worth seems to be going up, but I'm still just stressed. I'm still not sure I understand what's going on with my money and am I doing the right things?" And so today's episode, we're going to be talking about what are the right things that help many of our clients, at least, feel more confident in their financial world. Because let's just talk about this illusion of progress, right? Progress usually looks like, your net worth is going up. It usually looks like your accounts are getting maxed and stock grants are getting vested and you're getting high payouts. But something still feels off, right? Anxiety before the bonuses and the RSUs vest. Stress between market swings, right? If you're working at Amazon or if you're working for a tech company, the market swings definitely has an effect on your cash flow, right? Those vesting schedules. When we look at the guilt of spending money, when we have high vesting coming in and the stock is up, we might spend more money. And when stock is down, maybe we still spend that same amount of money. So this guilt creeps in. And spreadsheets, right? Like they show outcomes, not really the confidence, because here's what spreadsheet is. Spreadsheets are linear. I had a whole episode on this, right? I can plug in numbers. If you're saving $300,000 a year and we're growing that number by 7 or 8%, that looks magical on a spreadsheet. But in real life, that doesn't happen in that same capacity. Like, are you saving 300 grand? Or are you saving less than 300 grand? Are you really getting a 7 or 8% average rate of return? Did you calculate taxes in that? It doesn't measure flexibility. It doesn't measure any margin. So most people don't have a money problem per se. They have maybe a certainty problem or maybe just a confidence problem in their financial planning. So why do high earners feel this? Like I've already mentioned this. We've got variable income, which is constant mental math. That variable income, you've got some amount of confidence of some dollars coming in the door, but you don't know exactly what's coming in the door month to month sometimes. The equity compensation and the concentration risk. We have plenty of Facebook and Amazon and Google people that come over and start to work with us and have a huge concentration in their company stock. And as they're getting closer to retirement, they get nervous. Promise you, right? If you're in your 30s, that may not feel like it's that big a deal, but as you get closer to retirement, all of a sudden, and you start experiencing these swings in the market, it does feel real at that time, right? RSUs are stacking up, right? They're making good money, but you don't know how much of it is safe to spend. So it's really difficult to figure this out. So let's talk about confidence. How do we build the confidences, right? We want to make sure we're measuring the progress, not just the accumulation. We want to make sure we've got a clarity and control of our finances. What does this amount of money allow us to say yes to? Think about that. You've got money coming in the door. What can you say yes to, right? And not feel guilty about saying yes. What could go wrong, right? Are you ready for that aspect of something going wrong? Where this is where a financial planner, financial advisor that can come in the door and kind of go through the different things that could go wrong and show you, well, if this happened, this is what it would look like for you. And all cards on the table, we don't know what's really going to happen. The way that Alex and I plan is we prepare for the worst case scenario. Because in our mind, if we're preparing for the worst case scenario and our clients are still going to be okay, that's a good thing. But if you're not going to be okay in the worst case scenario, I'm not sure you're setting yourself up for the best chance of success. If nothing changed over the next 5 years, would this still work? And the reason I say that is I have plenty of people that come up to us and they're like, hey, in 5 years, I'm getting X. Or in 5 years, I'll be able to do Y. And if you're constantly waiting on that timeline, I'd question, are you living the life that you want to live now? B, what if that doesn't happen? What if everything is just status quo and that doesn't happen 5 years from now? that might be an issue for planning. So your net worth has tells you kind of where you've been, but the confidence can tell you where you can go. And which is why Alex and I, we don't do this backwards planning. We do future planning. We want to know what do you want your future to look like? And we'll build that with you. And then we build towards that, not looking backwards. So what are some takeaways? All right. First and foremost is understanding what we call cash flow, meaning what is the minimum, the bottom line that's coming in the door from an income perspective, right? And if you own a business, right, like what's that cash flow coming in the door? What's the minimum that you can expect? And what's the margin that you have from lifestyle to savings, right? When you understand that minimum, and sometimes early on, it might be the minimum that's coming in the door is sufficing lifestyle. That's great. And that's even important to know because that means when an income comes above and beyond that, we already have a plan in place and what to do. Like we help our clients build wealth building accounts where we're essentially kicking off income streams from their income, but we're capturing anything above and beyond their lifestyle that they gave us. So I'll give you an example. Let's just say your lifestyle's 30 grand a month. Okay. So every year or every month you're getting $30,000 kicked out to your personal checking to go spend, paid mortgage, all that kind of fun stuff. But when you have a month that comes in that's 40,000, our account automatically captures that $10,000. That's huge because it's easy to spend that extra $10,000 when you don't have a way of capturing what you've got or even measuring what lifestyle is. The fact of the matter is the more income you have coming in the door, the easier it is to spend it. Like when you're only making, like, think back for those of you listening that are making $300,000, $400,000, $500,000 a year. When you were making 50 grand a year, you knew every penny that was coming in the door and you knew every penny that was leaving the door probably because you didn't have enough income coming in the door to have that flexibility. With the more money you make, the more flexibility you've got. So understanding your monthly flexibility or your cash flow is huge. Optimizing is something that a lot of us chase. And Alex and I we'll make your financial plan more efficient or we'll optimize it. And the scary thing is you can chase optimization to a fault. And what I mean by that is if you don't have clarity of what you're actually like, what is optimization you're chasing? Like, what is the optimal lifestyle for you that you're chasing or want? Until you've got that clarity, you're chasing something that is something in the air that you don't really know how to quantify and build a plan towards, right? If you knew what lifestyle you want, and if you knew the income coming in the door, now we know how to optimize that. Taxes, risk, overconcentration, right? Building assets, protecting those assets. When you have that clarity, now optimization is built with that clarity, which makes it an efficient plan. And then last but not least, a practical takeaway for today is have the conversation with your spouse or your partner, right? What does lifestyle look like right now? What is it you want it to look like? Like truly look like, not like, hey, I hope to go buy the new Mercedes that just came out. Unless you really care about Mercedes. I've had this conversation before, right? If cars make you happy, fine, go buy the new car. But maybe stop spending money elsewhere that is actually not bringing you any value. You just have a habit of spending something and you don't even know you've got it, right? So make sure you have this conversation around what is it you want right now? What is it you want in the future? And make sure we've built a plan and guardrails around that. And having those guardrails and having, I can't say this enough, having a financial plan. And by plan, I mean, like, plan changes. Every year, our client's plan changes. Income goes up or maybe income goes down, plans change. But knowing it ahead of time, having something in place so you can kind of see what's going on and know the flexibility within that, that's where the confidence is. And that's where this illusion of progress kind of goes away. It's no longer an illusion because we can actually track it, share it with you and show you what's going on. That's huge. It's also scary. I think it's a reason why a lot of people don't reach out to a financial advisor or financial planner. For one, maybe they don't know what Alex and I do, because there are people out there that just maybe manage investments and you've never had this type of conversation. But for two, you kind of have to open up your personal world a little bit and your personal goals, and maybe you're scared of seeing what you actually look like. But I can promise you this, whether you look worse or better than what you think you do, or maybe what you're scared to see, knowing it and knowing what the steps are moving forward is a sigh of relief. I had never had a client come back to us and say, Ryan, even when it looked worse than what they were, every one of them said, I'm glad I had this meeting. I'm glad I know where I stand now, because I would have been burying my head in the sand just like an ostrich. And now I know where I can get to, and now I can know where I can make up for too, right? Sometimes it's just a pure conversation around what in the world is you value, and life can change really, really quickly. Okay. So those are the takeaways we've got for today. Just again, if this resonated with you, if the stuff that I touched upon, if you have these types of concerns, or if you've never had those type of metrics measured or had anyone look at your finances, like if this stuff resonated with you, share it with a friend, share it with a coworker, share it with your business partner. It's the whole purpose that Alex and I, the whole reason we decided to start this podcast is to help you think differently about your money so you can build the life that you want, right? Not the life that the world expects of you. So I hope this episode was valuable. Check us out at beardmoney.net. And at the top of that page is a contact us. If there's a topic, even if you want to get analytic, Alex is the analytic. We can go analytic on this episode, and we can bring up the YouTube and go analytic as much as you want. If you have a question for us, contact us, send the question over, and then we will respond to you and let you know that we're going to record that episode. Also, if you want a quick financial scorecard, in the show notes, there's going to be a link, the financial scorecard. Click on that link and you can get your own financial scorecard. Alex and I do not see this. This is private to you. The only way that we see it is if you click the button at the end to share with us. And if you don't click it, we don't see it. Promise you. Hope this episode was valuable for you. Until next time, cheers.
This podcast is for informational purposes only and is not to be construed as tax, legal, or investment advice. Although the information has been gathered from sources believed to be reliable, please note that individual situations can vary. Therefore, the information should be relied upon only when coordinated with individual professional advice. Guest speakers and their firms are not affiliated with or endorsed by Park Avenue Securities, Guardian, or Quantified Financial Partners, and opinions stated are their own. Guardian, its subsidiaries, agents, and employees do not provide tax, legal, or accounting advice. Consult your tax, legal, or accounting professional regarding your individual situation. All investments and investment strategies contain risk and may lose value. This material is intended for general public use. By providing this content, Park Avenue Securities, LLC is not undertaking to provide investment advice or a recommendation for any specific individual or situation, or to otherwise act in a fiduciary capacity. Please contact a financial representative for guidance and information that is specific to your individual situation. Ryan and Alex are registered representatives and financial advisors of Park Avenue Securities, LLC. OSJ 200 Market Street, Suite 1850, Portland, Oregon 97201. Phone number 503-221-1226. Securities products and advisory services offered through Park Avenue Securities, member FINRA, SIPC. Financial representatives of the Guardian Life Insurance Company of America, Guardian, New York, New York. Park Avenue Securities is a wholly owned subsidiary of Guardian. Quantified Financial Partners is not an affiliate or subsidiary of Park Avenue Securities or Guardian. Ryan Burklo, CA Insurance License Number 0K24924. Alexander Collins, CA Insurance License Number 0H24806.
8667504.1. Expiration date December 2027.